Hello, ladies and gentlemen. Welcome to episode 3 of PGIM India Mutual Fund presents Live Mint, Amend, Adjust, and Adapt. This is a series of high-powered virtual panel discussions where we unravel the success mantras for the new normal and try and look at what the roadmap should be for us in a post-COVID world. I know, post-COVID world doesn't seem to be appearing anywhere in the immediate future. We're seeing the number of cases that are still rising. But it's good to spend this time trying to figure out what needs to be done for India and for the world as we finally emerge from COVID. Now, I'm Vikram Chandra. I'm the founder of Veritagy. Today, we're going to be looking at the topic of policy and reforms. I just wanted to check the same point that I started off by asking Mr. Ghosh, that is it a perfect opportunity in your view, given the liquidity that is sloshing around, given the fact that the markets have all suddenly already risen, now you're hesitant to go and buy, an Amazon or whatever it is at the price and the valuation that they are. How much money are you going to keep putting into gold, although that's a great opportunity? So therefore, when people are starved of places to deploy their money, and when interest rates are zero or negative in country after country, is this the right time for India to say capital is obviously not a constraint? Let's come out and do a massive campaign of whatever it is, infrastructure building, healthcare building, other things that need to be done. This is the time to raise the money and really transform the economy.
Yes, Vikram, definitely this is the time, but doesn't mean that the world is waiting for us to open up and invest. I think we need to do certain things.
Yeah.
And in that, as you mentioned, I think India's core advantage is availability of low-cost skilled workforce. I think three sectors that have really taken advantage of this and are already in the international market are software, chemicals, and pharma. So chemicals is a relatively new entrant. It is clearly building on the track record built by pharma sector, and also by the fact that the most multinationals are now looking for an alternative to China as a sourcing base, and I think we are taking advantage of that. But coming to doing everything or focusing on domestic manufacturing for, let's say, electronics or consumer goods and building global hubs, my interactions with the industry players suggest that I think there are even today quite a few hurdles. So if we can focus on manufacturing to take care of our requirements and reduce import dependency, I think that is good enough for the time being.
Just wanted to ask you, on the entire point of capital market reforms that was spoken about, what would be some of the items that you would look at? And also, it's very clear that one of the biggest reforms that we've been talking about for the last 15 to 20 years was, why doesn't the government privatize? Why don't you disinvest? Why don't you, list public sector entities? It was interesting, actually, that the finance minister, during that economic package that was announced, one of the most major things that she said, that the government wants to get out of everything. The government doesn't want to be present, maybe a player in one company in every strategic sector. Otherwise, we want to be out of it. The question is, you need a lot of buoyancy in the stock markets and a lot of money coming into the stock markets to be able to absorb that much disinvestment.
If you see the government companies, we are talking about privatization and what's happening in the PSUs. So government companies are languishing at the same levels for many, many years right now. Not only government companies, now if you are a private company but catering to government or dependent on government policies, your valuations are extremely low. So I think there is a big disconnect today in terms of what market believes about PSUs versus a private sector which is not dependent on government. So market is willing to pay a huge premium for companies that have good business model and that have good governance. Whereas I think market has question marks on both this aspect when it comes to government. So I think what government has been doing over the last few years is doing, as you rightly pointed out, doing a OFS, offer for sale, where you reduce 2%, 5% stake, rather than doing a privatization. In stock market, short term, prices are determined by supply and demand. In long term, it is fundamental. So in short term, when we all know market participants that every 6 months or 12 months, government will come and sell their stake, and most important, at any price. Private entrepreneur is clear, this is the value of his company and he will strive to achieve that value when he's selling. But whereas in case of government, There is no approach on, what is the fair value, how much we should derive from this entity. So as a result, most of these government companies today trading at, single digit P and, dividend yields of 5-6%, but still there are no buyers. I think that is where there is a clear need to strengthen the DOD, Department of Divestment, and having a clear think tank on how to go about. And also focusing more on privatization rather than on disinvestment of the small stakes.
Yeah.